sleep, and you'll gain some insight on how to get the most bang for your buck regarding benefits for your employees. Kelly is correct that I have concentrated on the marine industry, developing plans and getting insurance carriers to understand that though the individual member may be small, in the aggregate, the association membership is large. And once they understand that, we're in a good position to negotiate large group benefits and pricing and bring that advantage down to individual smaller employers. So that's the goal, and we'll get to it now. These are the subjects that we'll be covering: trends in medical coverage, discussion on medical, dental, vision, disability insurance, how the programs are offered, how do you obtain quotes, what are some of the other value-added services that members can get at no cost that Gallagher supports, and any questions. Growing trends in medical coverage. What we do frequently is put out surveys, and the results of the surveys are consistent among the different marine associations, and it really, it's not good news. 92% say premiums are too high. 65% say the provider networks are adequate. Another 35% obviously do not think they're adequate. 77% said the renewals are too high and not justified. 44% say they're happy with their benefits. So 66 are not happy with their benefits, 66%. And what percentage of employer members actually offer coverage to the employees? And that's 60% of members do offer coverage. And these are the trends that are going on right now. One is to save money, employers are selecting higher deductibles. The higher deductibles have a cause and effect, and I'd like to get into that a little bit. It's not uncommon these days to see insurers having a $6,000 deductible, sometimes even an $8,000 deductible. And one of the problems with that is that if someone has, let's just say, a bad shoulder, that you're not going to want to get that fixed readily, because it's a big nut to crack. So you put it off until you can't put it off anymore. And the consequences of that are that, generally speaking, the treatment protocol is more severe, the recovery time is greater than had it been addressed earlier. And the only reason it wasn't addressed earlier is cost. In addition, one of the statistics that's kind of scary is that the number one cause of bankruptcy in the country is losing your employment. Second largest one is medical bills. So it's a real problem. Now, how about providers? Well, providers, the hospitals and doctors, they want to get paid. What percentage of the bills that are sent out actually get paid? It's in the low 50s%. So 53% of what they bill, they actually collect after 6 months. And in many cases, 6 months and screaming, trying to collect. Makes it very difficult for them to manage their businesses. Their cash flow is an unknown. Some of the new networks that I'm going to get into have addressed this in a different way. They have partnered with essentially financial institutions or banks. So their proposition to, let's say, a hospital is, listen, you're collecting 53% right now of what you want to collect, and it's over a period of 6 months. What we're going to do is we're going to offer you, if you sign a contract with us, 70% of what you'd like to receive, but you're going to receive it within 5 days. That allows that facility to plan their business better. We'll take a look at that in a sec in terms of how that can be employed for the in these programs. So our wish list is to have a strategy to lower premiums, lower deductibles. If there's a way in which we can get unused claim money returned to the employer, all the better. We want to get the employee satisfaction of plans offered in the positive area. And we want to have an excellent selection of providers. One of the networks, the network that I just mentioned, which is paying the providers within 5 days, is a company called Nomi. It is a provider network, and they have contracted directly in Michigan with all the Henry Ford facilities, Trinity Health, the Holland Hospital System, and then the University of Michigan hospitals, and a couple others. This is not a national network. They target certain areas. It is fairly robust in Michigan. Now, what we do is we pair this network. And by the way, one of the advantages of using this network is that, and I'm sorry for the on the next slide over to the left. Essentially, there's tiers of networks. So if you do use the Nomi network, and you do go to, let's just say, a University of Michigan facility and a doctor and have an operation or whatever, there is no cost to the insured, zero. The only two costs are that that the insured, if they use the Nomi network, could incur are emergency room, which is $500, and urgent care, which is $50. But all of the surgery, the MRIs, et cetera, all that is covered at 100%. Now, for those that want to not use a provider that is part of Nomi, the benefit design looks more regular, so to speak, where there'd be a deductible. Let's say it's $1,000, and then the plan would pay it 100% thereafter. The network that we like to use the most in Michigan these days to accomplish that is the Health Alliance Network, which is an operating unit of Henry Ford. 96% of all providers in Michigan belong to that network. It is a PPO, so no referrals to go see specialists and so forth. So between the Nomi network and the HAP network, you have excellent provider selection, and if you have an incentive to save money. In either case, the deductibles are not high. For those, and we generally run different combinations, and another combination we've had high success with is where we negotiate with an insurance carrier to give us a very competitive rate. And now I'm referring to the second slide, and the third and fourth slide here on page 7, where you buy a high deductible plan from a carrier and then marry it to a secondary program, which is designed to lower the deductible, lower the insured's exposure. It could be lowered all the way to zero, or in this case, the top one, on the third slide here, third is $359.36. Now that represents a high deductible of $8,500, but then a secondary policy, which is $143, to negate the $8,500 exposure down to, in this case, $500. So the top one there, with a total premium of $502 per month, represents a $500 deductible, 100% thereafter. Over the purple slide is the same thing, except it's $1,000 deductible. Next one down to $1,500, Next one is $2,500. The deductible is anything that the employer would like to have. But you can see, you can from 502, which is a $500 deductible, to 430, which is a $2,500 deductible. That savings is up to the employer to determine if it's worth it. Now, in terms of benefits, this design has 3 copays, typically. The first copay is for doctor visits, and that's $40 and for a regular doctor, $60 for a specialist. There is a copay for urgent care of $75, and there are copays for drugs. Depending on the tier, there's a different copay. So all of these designs and the pricing, the only difference in design is the deductible. I like to do that because it gets mixed up with apples and oranges. But these 2 strategies typically save at least 20%. Now, in terms of dental is typically offered by the employer on a voluntary basis. That's probably 75% of the time. The employer does not contribute toward dental, though that is an individual decision. Dental covers 100% of all charges for preventive care, which is your cleanings and your exams. And then it covers 80% for basic extractions, cavities, things like that. Major services, which are your caps, your crowns, your implants, are covered at 50%. Most plans that I see within the marine industry have a $1,000 or $1,500 maximum benefit, which these days is relatively light. What we have negotiated with is with Humana. Humana has one of the largest networks in Michigan. They do a real good job nationally on their dental. And what we wanted was, most dental plans allow 2 exams a year. Many of them require that if you go to the dentist within a 6-month period twice, you get gypped. You have to have a 180-day separation between visits. We don't like that. What we have here is Humana will give you 3 exams, 3 cleanings per year, and 4 periodontal cleanings if needed. Though I apologize, the last slide on page 8 is difficult to see, but I do have the rates in front of me. It's interesting that the $1,000 benefit for dental is $24 a month for a single person. A $2,000 is $27, and we've negotiated with Humana to also offer an unlimited benefit. Now, the unlimited benefit is $29 a person per month. That's a $2 increase over the $2,000. In many instances, people go for the unlimited because it's just another $2 more. We have also found that the Humana pricing, even with the unlimited, is extremely competitive within Michigan relative to the other players. Vision, very popular benefit. Again, it's usually offered on a voluntary basis. Typically, you have a $10 exam once a year, and then you pay a premium, and the premium, let's just say, is $6 per month per employee, and for that you get $150 worth of a bucket of $150 that you can use toward hardware. Hardware would be your glasses or contact lenses. Now, if you go to an in-network provider, you have your $150, you present your card. If the glasses that you're purchasing the frames and so forth are $300, and you have a $150 benefit, you would walk out with the glasses after paying $150. If you do go to a large chain store such as Pearl Vision, Lens Crafters, Walmart, the benefit is increased by $50. So it ends up being $200 in my example. Now, disability is sometimes offered by the employer, sometimes it's sponsored by the employer, and sometimes it's not offered at all. So it can be voluntary. The whole idea, though, is if somebody does get disabled, they will have a paycheck coming in. If it's set up properly, the benefit is not taxed. And usually it's 60% of your pre-disability income. Short-term disability typically begins after 7 days and is paid for 3 months. Long-term disability dovetails with that benefit, starts after 3 months, and is generally paid to age 65 or 67. So this can be completely voluntary. These are items that we like to have included in all plans. The idea is to access these programs that I'll go through in a sec. There's no cost to it, and they make sense. For example, it's 3 a.m, your 3-year-old has a 103-degree fever. Do you really want to go to the emergency room? The answer is no. But you do need to talk, or you'd like to talk to a licensed physician and get advice. You do that by using telemedicine. It's 24/7 access, and they can prescribe medicine, and they will call the prescription into your local pharmacist, and then you can go pick up the medication. The second slide on page 11, conditions treated. You can see the various different issues you can have addressed. In addition to this, there is also behavioral health for depression and so forth. Now, the way that works, it's not 24/7. You would make an appointment with a licensed psychologist or psychiatrist and have a session. There is no cost to utilize the telemedicine in either case, whether it be for urgent care or behavioral health. Another program that we like to have included, and this has to do with keeping people productive. Papa Care is a benefit where every employee that is enrolled would have 10 hours of Papa Care usage with no cost. So, for example, care for a loved one. If your mom needs transportation, or you threw your back out and you can't tend to your lawn, again, you would call Papa Care. They would have a insured person trained in what you need, show up and assist. Another benefit that we like, again, no cost, is VORI Health. So if you have back pain, knee pain, hip pain, shoulder pain, or other joint pain, and you don't want to go to the doctors, you just would like to get a occupational professional to evaluate your condition, and you do this via telemedicine. And they'll evaluate you and put together a treatment program for you from your home. Now, how are these programs offered? In terms of medical insurance, there are 2 ways in which these programs are offered. One, the insurance company puts blinders on in terms of the risk. They do not ask any questions about the risk, and if the risk is very high, doesn't matter. Everybody is insured. The second way, fundamental way that these programs are put in place is that the carrier does ask the employer or does do some research in terms of what kind of risk are they getting into. It's very similar to car insurance. If your driving record is very questionable, the rates are going to be higher. If the driving record is not so bad or clean, the rates are much, much lower. We have found that 80% of employers that we deal with do qualify for the lower rates. Now, in terms of how premiums are paid, these premiums are all billed to the employer monthly. Employee contributions toward the premium are taken out of their pay. And you can differentiate, beg your pardon, based on legitimate factors such as length of service, rate of pay, salary versus non-salaried, job duties. So someone who has, let's just say, the length of service longer than another person, they can have a different contribution arrangement set up by the employer. When properly established, all MBIA plans, and they would be set up properly, employer contributions are tax deductible and employee contributions are taken pre-tax. Now, what's needed to obtain quotes? You would give us a call, we'd chat, and we'd share a census template, which would get completed and returned to us, and then we get to work. Over the years, we've tried to add additional value-added services coordinated through Gallagher to our customers. And one of these, a big deal these days, is a electronic enrollment system, which takes the guesswork out of enrollment. So, for example, if Jim Hopgood is a new hire, typically an employer has to keep track of when the probationary period is over, when the paperwork gets sent in, tapping me on the shoulder to figure out what benefit I want, and signing off on, I understand that I'm going to be paying something for it. The employee navigator system, which is what we're talking about here, would be set up so that you would punch in the computer system into Employee Navigator. Jim Hopgood, new employee, started on such and such, and it keeps track and coordinates with payroll of when decisions I have to make have to be made. It will send emails to me to remind me that they have to be made. It'll tell me what everything costs. And again, it's all coordinated with payroll. So people who use it love it. Also coordinated within the system are the benefit booklets. So if you have a potential employee or one that just wants to get refreshed on what the benefits are, the benefit booklets can be online or in print. The integrated benefits that Employee Navigator gets into are the benefits administration, all reporting, new hire onboarding, PTO, time off. So it's a very robust system. It is for small to mid-sized companies, it's probably the most popular system in the country right now. In terms of the benefit booklet, the booklet can be basic information, or it can be a guide to help employees to determine what benefits they might want. So, for example, disability. If it's disability and you need that, or let's say it's myself who's interested, I can go if the employer is taking advantage of Employee Navigator, I can go to that section and it will guide me through various questions to determine what benefit I'd like to receive, if at all, what cost, etc. It will have all of the eligibility, enrollment timing, qualified life event information. Make sure that your employees have all the information at their fingertips. And depending on, and this is an Employee Navigator slide showing different benefits. You can have health savings accounts, flexible spending accounts, telemedicine, short-term, long-term disability, pet insurance, etc. That wraps up what I wanted to get into today, and I'd love to answer any questions that you have or have a discussion on what's on your mind. Anybody have it?
Any questions for Jim?
Yes, I'm curious, what are the smallest companies you're working with?
The answer to that is we work with everybody. The programs that I went through, the medical insurance programs, those we would need 3 or more employees. However, that said, what I mean by special programs, those are what I will call custom built, and we do need 3 or more. Let's say you have a company and we have a 1 employee or 2 employees. We can accommodate that, though we are using regular commercially available products. Hopefully that makes sense.
Okay, yes, thank you.
No problem.
Good question. Any other questions for Jim before we wrap up today? Okay. Well, Jim, thanks for an excellent presentation and for helping us better understand what's happening in today's medical insurance and the insurance landscape and the strategies employers can consider moving forward. We really appreciated your time today. And is it okay, Jim, if anyone has additional questions to reach out to you at another time?
Absolutely.
Okay. And I think that on the registration, we have your information. But if not, you can always reach out to me to get Jim's information as well. Okay. All right. No other questions? All right. Well,
Thank you, everybody.
thanks everyone for joining us today. We really appreciate it. Let
Thank
us
you.
know if you have any questions.
Thank
And
you.
Jim, thanks again.
Thanks, Kelly. Bye-bye.
Bye-bye.